Hello, friends. Did you know that millions of seniors are paying thousands of dollars out of pocket for their prescription drugs right now, even though a hidden federal subsidy is sitting there waiting to pay the entire bill for them? It is one of the biggest tragedies in the American retirement system. The government completely overhauled the Medicare Extra Help program, eliminating the old, frustrating partial tiers and expanding full 100% benefits to millions of new retirees. But here is the catch. The Social Security Administration does not automatically enroll everyone who qualifies. If you do not file the exact paperwork required, they will simply let you keep throwing your hard-earned money away at the pharmacy counter. Today, I am showing you the exact 2026 income and asset limits, the secret exemptions that protect your home and your car, and the step-by-step application you must submit to claim your money before the June 1 deadline. To be clear right up front, this isn't a new stimulus check or a cash refund deposited into your bank account. This is the official federal Part D low-income subsidy that pays your Medicare prescription drug costs on your behalf. Make sure you stay until the very end, because if you get approved for extra help, the government gives you a secret get-out-of-jail-free card that allows you to instantly drop a terrible Medicare Advantage plan right in the middle of the year, long after the standard open enrollment window has slammed shut. Now, why should you make sure you are subscribed to this channel? It is simple. Federal rules change every single year, and the government never sends an expert to your kitchen table to explain your choices. Subscribers find out about these changes in time to save their savings. The others find out after the money is already gone. Hit that subscribe button right now so you never miss a dollar you are legally owed. Let us start with a blunt truth that almost nobody is talking about. The massive 2026 full subsidy expansion. Thanks to the Inflation Reduction Act, the old partial extra help tier has been completely wiped off the books. In the past, if you made just a few dollars too much, the government would only give you a tiny discount, leaving you to handle the rest. For 2026, that entire compromise is dead. Anyone who qualifies for extra help now receives the full subsidy. This means a $0 Part D deductible, completely waived Part D premiums up to your state's benchmark, and heavily capped copays at the pharmacy counter. This applies directly to seniors on Medicare who are struggling with high prescription costs and whose income is under 150% of the federal poverty level. Your action plan for this first piece is straightforward. First, review your current pharmacy receipts to see exactly what you are paying in coinsurance or deductibles out of your own pocket. Second, understand that if you qualify under the new rules, your costs will permanently drop to no more than $5.10 for generic drugs and $12.65 for brand name drugs in 2026. Third, stop settling for those good enough commercial discount cards that do not count toward your Medicare coverage, and prepare to file for the actual federal subsidy. Think about David from Ohio. He was on the partial extra help tier a couple of years ago. Because of how the old rules worked, he used to pay a $100 annual deductible and a painful 15% coinsurance for his expensive Eliquis prescription. It was costing him over $90 a month just to keep his blood thinners filled. Under the new 2026 full subsidy expansion, look at how the math completely shifts for him. His deductible is instantly wiped out to $0. His brand name Eliquis copay is legally capped at exactly $12.65 per month. That means he saves roughly $77 every single month at the pharmacy counter. That adds up to $924 a year in pure savings. Over a 10-year retirement, the expansion of this single program keeps $9,240 in David's pocket. Your savings depend entirely on your specific prescription routine. If you are a senior taking only generic blood pressure medication, your costs will be capped at $5.10 per fill, which offers modest relief. But if you are in the situation where you take expensive brand name insulin and blood thinners, your costs are capped at that identical $12.65 per fill, saving you literally thousands of dollars the moment you walk up to the cash register. But to get these rock bottom prices, you have to pass the government's strict income test. That brings us to the next big hurdle, passing the 2026 income limits test. Many seniors look at the baseline numbers and assume they make too much money to qualify for government help, so they never bother to apply. Let us look at the actual legal boundaries. To qualify for extra help in 2026, your monthly income cannot exceed 150% of the federal poverty level. For an individual, the absolute limit is roughly $1,995 per month, which comes out to about $23,940 a year. For a married couple living together, the limit is $2,705 per month, or about $32,460 a year. But here is the mathematical loophole most people miss. The Social Security Administration automatically applies a $20 monthly income disregard that shields a small portion of your Social Security check from counting against you. Here is how you handle the calculation yourself. Step 1. Calculate your gross monthly income before any deductions are taken out. This means you look at the full amount of your Social Security check, your pensions, and any wages, not just what gets deposited into your bank account. Step 2. Subtract $20 for the unearned income disregard. Step 3. Compare that final adjusted number to the $1,995 single threshold, or the $2,705 married threshold. Step 4. Do not include any money you receive from SNAP, food stamps, or LIHEAP utility assistance in your income calculation, because federal law explicitly ignores those public assistance benefits. Let us watch this play out for Susan and Robert from Florida. They are a married couple whose combined gross Social Security income is $2,720 a month. When they looked at the official limit of $2,705, they were heartbroken. They thought they made $15 too much to qualify, so they almost threw the application in the trash. But look at the math when you apply the legal disregard. Because the Social Security Administration applies the $20 general income disregard, their countable income drops from $2,720 down to exactly $2,700. This places them exactly $5 below the $2,705 married limit. By understanding that single rule, they qualify for the full subsidy. If their Part D premiums were $40 a month each, which is $80 total for the household, Extra Help wipes that cost out entirely. Saving $80 a month equals $960 a year, which means $19,200 saved over a 20-year retirement, all because they knew how to apply a $20 mathematical loophole. Where you live also changes your situation. If you live in the lower 48 states, these standard income limits apply exactly as written. But if you live in Alaska or Hawaii, the federal poverty limits are adjusted significantly higher due to the local cost of living. That means you can earn thousands of dollars more per year in those states and still easily qualify for the exact same subsidy. Once you clear the income hurdle, the Social Security Administration sets a massive trap regarding your life savings. But most seniors completely misunderstand what actually counts toward that limit. That trap is the hidden resource test, and learning the asset exemptions is how you beat it. The Social Security Administration enforces a strict limit on the assets you can hold to receive extra help. For 2026, a single person cannot have more than $18,090 in assets, and a married couple is capped at $36,100. Those figures look terrifyingly low, but they include a $1,500 per person burial expense allowance. The real secret is what the government completely ignores. Your primary home, your vehicles, your personal possessions, and your life insurance policies are 100% exempt from the math. To navigate this without disqualifying yourself, follow these precise steps. First, tally up your actual countable resources: checking accounts, savings accounts, stocks, bonds, mutual funds, and traditional or Roth IRAs. Second, explicitly subtract the value of the house you live in and the cars you drive. Do not list their equity on your application. Third, if you intend to use at least $1,500 of your current savings for future funeral expenses, make sure you check the specific burial allowance box on the application. Checking that box automatically raises your allowable asset limit to the maximum $18,090 threshold for a single person. Take a look at Linda from Arizona. Linda is single and has $15,000 sitting in a regular checking account. She also owns a $300,000 house free and clear, and she drives a $20,000 car. If you add all of that up, her total net worth is $335,000. Because of that large number, she assumed she was far too rich for extra help and never looked into it. But when the Social Security Administration evaluates her application, they completely ignore the $300,000 house and the $20,000 car. Her only countable asset is the $15,000 in checking. Because $15,000 is well below the $18,090 single resource limit, she fully passes the asset test. This allows her to claim the subsidy, saving her an extra $1,500 a year in out-of-pocket drug costs. while her $300,000 in home equity remains perfectly safe. Your exact financial situation dictates your strategy here. If you have $20,000 sitting in a liquid savings account, you will fail the asset test and receive a flat denial. However, if you are in the situation where you choose to use $5,000 of that cash to pay down your existing mortgage or fix a leaking roof before you apply, your liquid assets instantly drop to $15,000. You now pass the test, get the subsidy, and save your retirement income. If you pass these income and asset tests, how do you actually get the money? For millions of seniors, it requires zero paperwork at all because of the automatic enrollment purple letter. If you already receive financial help from your state government, specifically full Medicaid, a Medicare savings program that pays your Part B premium, or supplemental security income cash benefits, you do not have to fill out an application for extra help. Federal law legally mandates that you are deemed eligible. The Centers for Medicare and Medicaid Services automatically enrolls you behind the scenes and mails you a colored notice printed on distinct purple paper to confirm your benefits are active. Your steps for managing this automatic trigger are simple. Step 1. Check your mail diligently for an official federal envelope containing that purple letter. Step 2. If you know you are enrolled in a Medicare savings program but you never received your purple letter, do not wait. Call 1-800-MEDICARE to manually force the system to update your status. Step 3. Do not fill out the separate extra help application online if you are already deemed eligible, because submitting duplicate forms can confuse the automated system and delay your pharmacy discounts. Consider Charles from Texas. Charles applied for a Medicare savings program in January to get his state to cover his monthly Part B premium, which cost $202.90. He was approved by his state in February. By March, without Charles doing anything else, the automated federal linkage kicked in and a purple letter arrived from Medicare. Without filing a single extra piece of paperwork, Charles was automatically granted extra help. The Medicare savings program saved him $2,434 a year on his Part B premiums, and the automatic extra help subsidy wiped out his $50 a month Part D premium while capping his drug copays. That saved him another $1,500 a year. Combined, this automatic connection secured him nearly $4,000 a year in federal assistance. This creates two distinct situations. A senior on supplemental security income automatically receives the purple letter and the full extra help benefits without lifting a finger. On the other hand, a senior who only receives regular Social Security retirement income will never get that purple letter. You must actively apply for extra help yourself, or you will be left behind. And if you do have to apply, locking in the subsidy gives you the power to execute a benchmark premium wipeout. Extra help has the power to pay 100% of your Part D monthly premium, but it will only do that if you enroll in what Medicare calls a benchmark plan. Every state has a specific premium threshold calculated by Medicare each year. If you pick a basic prescription drug plan with a premium at or below that state benchmark, the subsidy covers it entirely, and you pay $0 a month for your coverage. To make sure you are not left paying a partial bill, follow this plan. First, once you are approved for extra help, log directly into the official Medicare.gov website and use their Plan Finder tool. Second, check the specific box indicating that you receive the extra help subsidy. Third, look closely at the results for plans marked with a $0 premium with extra help badge. Fourth, remember that if you intentionally choose an enhanced, premium-heavy plan that costs $80 a month, the subsidy will only pay up to the benchmark amount, say $35, and the insurance company will bill you out of pocket for the remaining $45 every month. Look at Patricia from Nevada. Patricia was paying $60 a month for her standalone Part D plan. She applied for extra help and was approved, but she did not bother to change her insurance plan, assuming the government would fix the bill automatically. Her state's benchmark limit happened to be $40. Because her chosen plan was $20 over that benchmark, the subsidy paid the $40, but Patricia kept getting billed $20 a month by her insurer. Once she realized why, Patricia called a licensed broker, used her extra help status to switch to a $35 benchmark plan, and her monthly premium instantly dropped to $0. By switching to that benchmark plan, she saved an extra $240 a year in premiums on top of her massive copay savings. Over 10 years, that single plan switch keeps $2,400 in her bank account. The rule is absolute. Choosing a standard benchmark plan means your Part D premium is $0. Refusing to switch away from an expensive, non-benchmark premium plan means you are legally required to pay the mathematical difference out of pocket every single month. Ready to claim this money yourself? Here's the exact online process to bypass the phone wait times completely. To complete your application efficiently, you must follow the official action plan for filing online via sa.gov/extrahelp. While Medicare administers the pharmacy benefits, the Social Security Administration is the agency that processes the applications. The official physical paperwork is Form SSA-1020, but trying to use a paper application is a massive mistake. The fastest, safest way to get approved is through the secure online portal. Here is the exact sequence to follow. Step 1. Gather your recent bank statements, tax returns, and investment account balances before you sit down. Step 2. Go directly to sa.gov/extrahelp. Step 3. Click the button that says Apply Now to open the electronic questionnaire. Step 4. Accurately report your income and assets, ensuring you do not list the value of your home or your primary vehicles. Step 5. Click Submit. The Social Security Administration will electronically cross-reference your answers with internal IRS data and issue your official determination letter in the mail within a few weeks. Think about William from Michigan. William assumed that applying for a federal subsidy would require hiring a lawyer or spending hours on hold with a government office, so he avoided it for a year. Finally, he sat down at his computer with his bank statements and went to sa.gov/extrahelp. It took William exactly 15 minutes to type in his $1,800 monthly income and his $10,000 checking account balance. He was fully approved 14 days later. He immediately saved a $545 annual Part D deductible, and his monthly drug costs dropped from $150 a month down to just $25. He saved $1,500 in copays plus the $545 deductible. That 15 minutes of typing secured William $2,045 a year in tax-free federal benefits. The processing method you choose dramatically changes your situation. Applying online means your application is processed rapidly by computer systems, cross-checking electronic records, giving you an answer in days. If you choose the alternative situation of mailing a paper SSA-1020 form, it can take weeks or even months to process, and it is highly prone to being delayed or lost entirely in the mail. Once you have the subsidy locked in, you gain immediate access to the single most powerful hidden perk in the entire Medicare system: the special enrollment period loophole. Normally, if you pick a Medicare plan that turns out to be terrible, you are locked into that plan for the entire calendar year until the fall annual enrollment period rolls around. However, if you possess extra help, federal law grants you a continuous special enrollment period. You are legally permitted to change your Medicare Part D or Medicare Advantage plan once per calendar quarter during the first 9 months of the year. If you find yourself trapped, here is your step-by-step escape route. First, if your current Medicare Advantage plan denies your doctor or your Part D plan suddenly drops your critical medication from its formulary, do not panic. Second, because you have extra help, contact 1-800-MEDICARE or a licensed broker in the months of February, May, or August. Third, explicitly invoke your low-income subsidy special enrollment period to instantly drop your current plan and enroll in a superior one. Fourth, your new, better coverage will begin on the very first day of the following month. Look at Mary from Pennsylvania. Mary picked a Medicare Advantage plan during the fall. In March, she was blindsided by a cancer diagnosis, and her Advantage plan flatly refused to cover the top oncologist in her state because that specialist was out of network. Without extra help, Mary would have been trapped paying 100% out of pocket for that out-of-network cancer doctor, easily costing her $10,000 or more, or she would have been forced to wait until the following January to change plans. Because she had extra help, Mary utilized her special enrollment period loophole in April to instantly drop the restrictive Advantage plan and switch back to original Medicare with a standalone drug plan. Her new coverage started on May 1st, allowing her to see the top oncologist for a standard 20% Part B coinsurance, literally saving her life and tens of thousands of dollars. This highlights the ultimate contrast. Trying to switch plans in July without extra help means your request is denied and you are legally locked into your plan. Switching plans in July with extra help means your request is approved and your brand new coverage starts on August 1st. To wrap everything up, let us review what we covered today. The 2026 full subsidy expansion has completely eliminated partial help, capping your generic copays at $5.10 and brand names at $12.65. To pass the income test, your monthly gross income must be under $1,995 for a single person or $2,705 for a married couple, but remember to subtract that $20 income disregard. For the asset test, your primary home and vehicles are completely exempt, meaning you can easily stay under the $18,090 asset limit. If you already have Medicaid or an MSP, look for your automatic purple letter in the mail. If you do not receive it, file online yourself at sa.gov/extrahelp. Make sure to select a benchmark plan to wipe out your premium and use your quarterly special enrollment period if you ever need to escape a bad insurance plan. The Inflation Reduction Act completely overhauled Medicare Extra Help, meaning if your monthly income is below $1,995 and you understand the secret asset exemptions, you can legally force the government to pay your Part D premiums, wipe out your deductibles, and cap your prescription costs at just $12.65.